Hello and welcome to the weekly Forex Review here at xm.com. I'm Andreas, your EU currency analyst, and I'm here with my colleague Rafi Boyajan. So Rafi, the US currency is up on the week, specifically by 0.5%. Yesterday's inflation numbers out of the US supported the currency. They all surprised to the upside, or I should say they broadly surprised to the upside, raising prospects for the Federal Reserve to deliver another rate hike later in the year, specifically in December. Can you talk to us about the numbers as well as potentially any other catalysts contributing to dollar strength?
That's right. So like I said, we had the better than expected inflation numbers out of the US. Yesterday we saw CPI year on year rising by 1.9%. Expectations were for 1.8%. Core inflation was unchanged at 1.7%, but this was better than the 1.6% as expected. We did see a bit of initially we saw the dollar yen surging higher after the data, but then we saw a bit of a pullback. There were some market commentators saying that the upswing might be temporary, given that we had the Hurricane Harvey hitting the US at the end of August. And one of the reasons why US inflation went up in August was because of higher gasoline prices. But others are saying that we are seeing the start of inflationary pressures. So that's why we're seeing the odds of a third rate hike by the end of the year, rising back above the 50% level. Dollar yen is extending those gains today. It hit a 7-week high, 111.32 a short while ago. So it is looking rather bullish for the dollar. And we also saw the risk aversion related to North Korea, although we do have a bit of a risk of some tensions with regards to North Korea following that missile strike over Japan earlier today. But markets are getting used to this, and we aren't seeing anything new from North Korea in terms of like potentially we saw the nuclear test that came a bit of a surprise. This one was a bit more expected following the UN sanctions we had early in the week, and now we are seeing some renewed hopes of tax reforms being passed before the end of the year. President Trump is actually working with the Democrats on coming to some sort of an agreement on reforming the US tax code. So things do appear to be looking up for the greenback.
Interesting. And moving back to North Korea, I think you are right, Rafi. The markets indicated that they either expected such an action by the country, or they didn't really see it as adding to tensions. Rather, it's just a continuation of provocation from recent weeks. And supporting this is the fact that gold, that hugely benefited in the past from such developments, is today down on the day. Also, dollar yen is up. But with that, let's move to yesterday's Bank of England meeting. There was a 7-2 vote to keep the rates at the record lows of 0.25%. Despite the 7-2 vote, which is something that would have initially been interpreted as dovish, we saw sterling rally relative to majors, including the dollar and the euro. Why did this happen?
Like you said, 72 vote was perceived to be dovish, would have been perceived to be dovish prior to the meeting. Expectations were that if we saw a 6-3 vote, then that would have been the hawkish one. But if you look at the meeting minutes, the bank did say that a majority of MPC members now are in agreement that some withdrawal of monetary stimulus in the coming months would be appropriate, assuming, of course, that the economy continues to grow and inflationary pressures continue to rise. And this was seen as very hawkish because up until now, it was thought that only a minority, or at best maybe half of the MPC members, would be supportive of a near-term rate hike. This suggests that the majority of MPC members are now in favor of raising rates within the coming months, possibly as early as November. And this obviously triggered a huge rally in the pound. We saw the pound rising, extending yesterday. It rose more than 1% against dollar. Today it's doing even better. It surged above the 1.36 level. That's actually the highest since after the post the Brexit referendum. And even against the euro, it's doing rather well as well. The euro is now struggling to hold on to the 0.88 level against the pound.
Yesterday we had some comments by a BoE policymaker that further added to speculation for a hike to be delivered sooner rather than later. And with that, let's move to next week. I know that we're going to have an FOMC meeting. Beyond that, what we should be paying attention to?
Well, the FOMC will, of course, be the highlight. We're expecting an announcement on the balance sheet. And we're also going to have the latest quarterly projections, particularly the dot plot chart by FOMC members. It's going to be interesting to see whether most FOMC members still expect to hike rates one more time later this year. But we're also going to have a meeting by the Bank of Japan. They're not expected to do anything this month. In terms of data, the focus will be Eurozone flash PMIs, UK retail sales, and Canadian inflation and retail sales, as well as GDP numbers out of New Zealand might also attract some attention.
Thank you very much for your analysis, Rafi. Thank you everyone for watching, and have a great day.